Tim Quast, CEO of Market Structure Edge, joining us here on Premarket Prep. Mr. Quast, is there still snow on the ground? Is what I want to know.
There's snow in the sky, rather
Still?
than it is snowing right now.
Oh my goodness!
It was a great weekend actually, but it is snowing hard.
Did you hit some
in
slopes?
Only a foot. We were out hiking. Actually, the conditions were lovely, but the storm came in overnight, which was perfect, and so we'll take the moisture. But it's snowing in Steamboat.
Wait, so it snowed hard on Friday. It's
Yep.
still snowing 3 days later.
Correct.
Oh my
Yes.
gosh! Wow.
So that snow like 365 a year there?
It can snow 11 out of 12 months.
That's a good thing about things. If you like skiing, that's awesome. If you hate snow, that's not the place to live.
Wow.
Right, but the weather is remarkably good. So you can have snow, but then the day could be 60, 65 degrees.
That's unbelievable. You have the best of both worlds. It's hot and you get to ski.
Yeah, but don't tell anyone. We don't want the word getting out.
I'm coming to visit, man. I'm coming to visit you.
Come on, anytime.
All right. Mr. Quast, what's on your radar? Actually, no, before I ask you about this week, give us your assessment of last week into and through the options expiration.
Well, and Dennis, I heard you talking a little bit about I think you were talking about monkeypox stocks and that how CNBC would imitate you. So my key takeaway from last week was how pleased I was that CNBC actually paid attention to options expirations. And I heard Mike Santoli mention it again this morning. So finally, it's getting through to people that this matters. I think the good news is we survived them. I hope that if I would look back at the things that we talked about, Spencer, on Monday. One of those being Verizon. That's the kind of they weren't all good. Pepsi didn't do too well, but Verizon did very well. That's the kind of thing that you want to, if you're going to trade during options expirations, that's what you want to hold. And the reason it's so challenging, traders, is because people reset derivatives, which are implied supply and demand, and it can vanish or manifest instantly because they are a right but not an obligation to do something, and that's why it's very challenging. So you have to go into those periods knowing that condition exists. And then Spencer, today, new options trade. So we're not out of the cycle. It's Wednesday when we're through the period. So Tuesday, we call it Counterparty Tuesday. That's when the banks and the other parties to the things that lapsed last week and reset today get squared. And so if we get through that, then we could have maybe a decent stretch. We'll see.
And then, so as far as drilling down a little bit deeper here into the sectors or the stocks, or if you could pull up the watch list here, what are you watching this week?
So I'll tell you the interesting thing to me, and Edge Mob, you know this, that you can look at what we call big and stable stocks, which we put on the platform for folks. It's automated, and then what we call momentum, and it can help you understand whether money is focused on managing risk, or is it more interested in taking risk, right? You could use the old, I don't like the phrase, but it's what everybody uses, risk on, risk off. So big and stable would be risk off stocks, and there are only 10 of them. So that number has come down. Notice that the demand stays right around 5 and supply is declining. That's the kind of stuff that you can ride through rapids aboard. Then on the momentum side, there are only 3 in this portfolio. It will look for things with extreme demand and falling supply. While there are only 3 in that group, that is an improvement. It's basically, if there was 1 last week. So there are some indications here of a shift in where money is going to go. I like to go look at the semis, look at the semiconductors, improving demand. Supply is too high, but the demand side is improving. I like to look at the tech sector to see, well, what's happening here? Tech sector looking better, but supply is still high. Then I like to look at what we call diverging liquid up, and this is how I do it. I'm going to go look at diverging liquid passive. Where's the passive money going? Well, it's going to tech. And the demand side looks pretty good. The supply side looks pretty good in this group of 40. So I'd look at that and say there is a chance. That's not great, but there is a chance that money wants to buy growth short term. It might only last until the end of the month, but those are signals that I will go look at. I like to see, what broad sentiment is, what the context is, and then where the money is going.
Tim, would you mind just leaving and coming back because your mic is having some crackling noises, and I don't know why. I suspect if you just leave and come back, then it'll work itself out as it normally does. So we'll bring Tim back on in like just another couple of seconds, and I hear the crackling too.
Yeah, I was hearing it too. I even muted myself. I didn't know if it was like.
I know. I was on it too.
It's just enough to be annoying.
We're trying to mute ourselves because we're like, is it me?
Here, wait.
I know. I did too. I'm like, I'm hitting my thing. I'm like, well, what do I do now?
Yeah, no, it's just enough to bother me, but not enough that I can't understand what he's saying. All right, let's see if this is better. All right.
Take two. Is it better?
Maybe.
It's just a little. Now you're distant.
Not really.
No, actually,
it's actually.
You know what?
Run with it. Run with it.
We're running with it. We're rolling with it. We're rolling with it. All right.
The show must go on.
The show must go on.
Okay.
Okay. So let's get the screen back up there, Tim.
Okay.
And let's go back to that page we were on.
Okay. So I think we are still. Is this still being shared? Do you still see it?
Yes.
Okay. So let's go here. Let's go to, there's Benzinga May 23, which it is. And we can talk about some things in here that look to me promising. So notice that the demand side is rising, supply side is falling. That's the kind of condition you want. That's what you want to trade, because it doesn't matter what's going on. It doesn't matter what inflation is, what monetary policy is, whether there's monkeypox or proxy wars. If you trade diverging supply and demand, you can succeed. And so I look at this list. I look at this list and say it's a curious basket, because you can look at Verizon's. I've kept it here so that we could see how that has worked out. But there are things like EQT, which is an energy play, natural gas play that looks pretty good, and Philip Morris. And you would say those things are contradictory. They are, and I think that's a good indication of where the market is. There remains uncertainty in the market. And so here, look at Philip Morris. Don't look at price. This is price right here, just closing price, and it went down a couple of days ago. Look at the demand side and the supply side. All things being equal, the probability that condition produces returns in the next several days is extremely high. And that's what you want to trade. And the curious thing to me is that you have this contradiction between a stock like Massimo, which is a healthcare stock. So I would put that more in the growth category, and a Philip Morris. So here's Massimo. It's got very strong demand and falling supply. The likelihood that produces gains is, again, very high, but they're two opposite trades. And maybe that kind of thing works out. We'll find out. But those are two great examples looking at market structure that you could consider.
Wait, when you said tech is looking okay, I think that's what you said, right? You said tech is looking okay. What tech specifically? Let's
go have a look. And by the way, you can always go look at things like VMware and Qualcomm. All the talk this morning is about this deal rumor. Well, you can look to see if those conditions exist, and we can come back to that. But if I just look at tech, here's what I would do. You go down here to the tech sector, and you narrow it. What you want to do is look at things in here that meet the criteria that we always want to follow, which is you want rising demand. So we look at the D trend and say we want it to be up. We want it to be north of 5. So maybe we just bump up here to 4.7. I like to trade things that are very liquid. So I move my dollars per trade up to call it $5,000-$6,000, and maybe the supply side that is lower. So that brings us down to 9 stocks just like that I would look at, from SAP to, believe it or not, even Applied Materials, which didn't do well last week. But maybe the supply demand chart will give you opportunity. But it's that easy to narrow things down to That's how I think about it. I don't think about the fundamentals, the technical patterns. I'm just going to look at supply and demand, and the optimal ones would be stuff that has rising demand and falling supply.
All right, I see a couple questions from the chat, and yeah, I agree with the chat. I do think, Tim, your mic is hitting up against your shirt whenever you move. I think whatever,
okay,
like on your collar or zip or whatever. Someone asked about AMD quickly, so let's look at that one, and then we'll let you hop.
Okay, so if we look at AMD, which one of the great retail stock, people love this stock, right? It just no question that there's a lot of fixation on it. Right at the moment, it might work. Why? Well, here's the demand side, and here's the supply side. It's too high. I don't like to trade things that have more than 60% of their trading volume coming from borrowed stock. That's what that means. So traders, very important to understand, market makers can just create stock. You could have shareholders of AMD who don't buy or sell a single share, and the price can move wildly because market makers just manufacture stock to fill rising limit orders. So it's a very challenging trade. But if you're going to trade AMD, you want to buy rising demand and falling supply, and those conditions do exist here.
All right, Tim Quast runs Market Structure Edge. The link is on the screen, marketstructureedge.com. He joins us every single Monday. Tim, always a pleasure.
Back at you.
Oh, no, talk to you in 2 weeks.
2 weeks. Okay. All right.
Next Monday.
Well, I'll miss you guys.
Next Monday is a holiday.
That's right.
That's right. All
right. Right.
Look at that. All right.
I always hate it when holidays come along and interrupt market structure.
I know. It's the way it goes sometimes.
Have a good one. Tried to do it today.